the data suggests that there's no evidence of recession, there's no evidence of pending doom. And yet, if you look at the sentiment data, whether you're looking at small business optimism or consumer confidence, it's really reflecting that people feel, think, and speak about the economy basically as if things were as bad as they were during COVID, which we know intrinsically isn't true.
Hey, Alex, thanks for taking time with us again to talk about the latest edition of our Pulse Report. For those who are just joining in, the Pulse Report, of course, is our quarterly survey we do of both industry participants, retail and supplier, and then we also go out to a national panel of car wash consumers. And so I'll give my take, Alex, and I'd love to hear your take, especially on the economic side, your specialty. We saw in the data this quarter a little bit of an erosion of satisfaction levels amongst subscribers and non-subscribers on the value and price. And for a non-economist, that smells a little bit like what we see in the headlines. People may be a little more cautious. Now that's, again, my cursory look. Give me your take maybe on that data, those sentiments, and what you might be seeing in the economy.
Yeah, absolutely, Eric. I think it reflects an erosion in our satisfaction with life in general. I mean, the world is a crazy place. I've been titling my presentations "This is Fine," with the cartoon of the dog with surrounded by fire, because that's in a nutshell kind of how people feel about the economy today. There's so much change, so much uncertainty. It changes by the minute, sometimes with logical reasons behind it, other times just at the whim. And we really see that disconnect between the actual economic data, whether you're measuring retail activity or industrial production, which both say not only that we entered 2025 with quite a bit of positive momentum, but that things have actually accelerated through the April data, which is the latest numbers that we have available right now. And that's probably because of the pull forward effect of the tariff situation. But nonetheless, the data suggests that there's no evidence of recession, there's no evidence of pending doom. And yet, if you look at the sentiment data, whether you're looking at small business optimism or consumer confidence, it's really reflecting that people feel, think, and speak about the economy basically as if things were as bad as they were during COVID, which we know intrinsically isn't true. So that disconnect is very much evident in the disparity between the hard data, which actually measures economic activity, and the sentiment data, which talks about how we feel.
I'm glad you started there. Something that struck me was, and in your commentary in the report, you cited some remarks from the Federal Reserve of St. Louis. And I thought to myself, it looked like you pulled it out, or it was pulled out of a headline, a bit of hyperbole. It talked about this dramatic shock, a COVID-like shock. But then a lot of the economic data, and we can even get into talking about retail spending, doesn't support that. So not only does it seem that sometimes the retail, the consumer, might feel and act differently. Those are not always aligned, right? But now even I'm looking at the Federal Reserve or a Federal Reserve Bank, and it seems like they may be susceptible to some of the same. Or am I reading that wrong?
Well, I mean, the Fed obviously, with the onus on trying to be proactive rather than reactive, right? They've gotten in quite a bit of trouble for being too late to cut interest rates. In the previous couple of years, now are they behind the curve in trying to cut interest rates to stimulate more economic activity? So they're between a rock and a hard place, right? On the one hand, when they look at the hard data, they say, well, the labor market seems to be holding up pretty decently. The last month, this was as of a few days ago, we got the May jobs report, still created about 140,000 jobs in the economy. The unemployment rate, while elevated from the lows we saw a year ago, still at 4.2% reflects a relatively healthy state of the labor market, resilient and conducive to a growing economy. So they're looking at that data. They're also looking at all of the activity on the tariff side. And, when you try to apply logic and reason to that, you think, well, if companies in the US that are having to pay these tariffs are going to try to pass at least some of those increased costs to the consumer, it's going to be an inflationary driver. And so their dual mandate at the Fed, of course, is balancing, ensuring a healthy labor market and making sure we keep a lid on inflation. And so they are being very much influenced by both hard data and sentiment data. The sentiment is the way that we feel about impending inflation down in the second half of the year. And we're starting to see some of that, by the way, trickle through. There's this great Instagram account that posts employees from Walmart and Target as they go to switch out price tags for certain goods. And especially in the last few weeks, there's been some really compelling posts. One Target employee was switching out the price tag of a USB C charging cable for an iPhone. The pre-tariff price was $9.99. The post-tariff price was $17.99. Right, so you start to really think, okay, it's trickling through the economy. It's going to start showing up more and more. And so the Fed is, I think, being influenced by some of that, even though the actual inflation data is quite benign. Right, we're about to get another print for the latest month, but as of the last reading that we had, overall CPI just at 2.4%. Even if you look at the core number, which strips out the volatile food and energy prices, that's at 2.8%. So not far from the inflation target of 2% that the Fed has had, but they are keeping that kind of unease about inflation in the back of their minds as they make these comments and as they give future guidance for what their interest rate policy is likely to be.
That's helpful. Thanks, Alex. And I should have even cited, I think another place this carries forward in the research on the consumer side is when I mentioned the erosion in value and price. Yet the flip side of that same coin is we don't see any degradation in intent to maintain subscriptions, right? The intent to cancel, I should say, in our world did not increase. So even though there's a little more sensitivity, not all the behaviors align to the sentiment or the feelings in one's stomach, so to speak, or pocketbook.
Yeah, I think if you look historically, it takes some time for the sentiment to actually carry through into behavior, to your point. So, the sentiment has really fallen precipitously in the last 2 to 3 months. And it usually takes at least 2 quarters worth of negative movement in sentiment to start showing up in the actual behavioral data, whether that's retail sales or industrial production, business investment. And so as I think about the implications of this, particularly to the second half of the year, I'm really focused on, can we contain the uncertainty, the whiplash regarding tariffs and all of the unknowns to the first half of the year, giving us an opportunity to kind of settle in a little bit in the second half and continue growth at a slower pace than what we saw in 2024, to be sure, but growth nonetheless? Or is there not enough time to combat the headwinds that we've encountered so far in this first 6 months of 2025? And are we headed towards a contraction? And the reason I say the word contraction rather than a recession is because, again, that sentiment versus actual data. When we think about recession, we think back to the last two. Most, especially younger generations, have only lived through 2008, 2009, and the COVID recessions, right? So it's these visions of high unemployment, visions of really struggling families. And that's not what we're talking about here in the second half if things do unfold that way. We're talking about a minor contraction in economic activity because, as I mentioned earlier, the momentum was certainly there to set up 2025 to be quite a strong year for the economy when we entered the year. And so, any contraction is expected to be relatively mild if it does occur.
Well, Alex, you're beginning to look forward a little bit, and one of the areas that stood out to me was if we look at the sentiment amongst retailers and suppliers, sort of there's the general mediocre to malaise, let's say, sort of a low single digit, mid single digit growth expectations for 2025. The one place there's a little bit of difference is retailer optimism for 6 months from now remains a little more subdued. Negative in some ways. Suppliers, slight difference, not massive, but seem a little more optimistic about things from 6 months from now. So, who do you think's got it right? What would support a future view 6 months out from now in either of those sentiment areas?
when I contemplate that question, I go to the input messaging that both of those groups of people are getting right now, right? So the retailers are looking at the inputs of consumer sentiment, right? And that consumer sentiment continues to be suppressed. Now we're in June 2025. It If it continues that way, as I already mentioned, that will actually turn into weaker consumer behavior. So it's not surprising to me that the retailers are listening to what the consumers are saying, which is that they feel doom and gloom about the economy, about their own prospects. There was a really interesting study that showed that 25% of the country is effectively unemployed, which means that, even working full time, you're not providing a good enough quality of life or living standards for your family. And so a lot of that gets fed into the messaging to the retailer community. The supplier community is getting messaging from the business leaders, right? Those tend to plan more in advance. They've got their budgets allocated. They know what their spend is likely to be for the remainder of this year, at least, right? If we're now talking about the delayed impact of retail activity at car washes, then that will impact buyer behavior of the operators towards the end of the year and into early 2026. Then they'll start curtailing budgets, planning for lower amount of spend. And so it makes a lot of sense that both of those are giving some conflicting messages. Where I would say, my gut feeling is telling me that is more accurate. I believe that we tend to kind of swing as a pendulum in terms of when things are headed in a negative direction, we tend to believe that they're going to remain negative and get worse. We have a very hard time projecting into the future something different than what's going on today. So you look at what's happening on the tariff front and you realize that very quickly, the thing that is driving the most pessimism in the economy, which is the trade changes that we're going through right now, there are some hard deadlines coming up. July 8th and 9th, we're supposed to be getting trade deals with the likes of India and the EU and Vietnam and South Korea, some of our biggest trading partners outside of NAFTA and China, of course, right? Now, the Chinese deal, much more complex, much more elements involved, whether it's critical materials, whether it's things like intellectual property protection, access to the Chinese market for American companies. That's going to take a longer time to negotiate. So the expectations there are set. But if we can actually get some clarity about, even if the tariffs stay in place, let's say we have this 10% baseline tariff that remains in place for the second half of the year after the trade deals are done, companies and people can start to adjust. It's the volatility and the uncertainty that everyone is being driven crazy by right now, the not knowing what the future is like. If we can get some clarity out of those trade deals, then I think we're going to have a rebound in sentiment and people will start to feel somewhat more positive about prospects for the future and can start planning for that as well. So I tend to believe the hard data over the sentiment data for now. And my expectation is we should be able to avoid any kind of contraction. And so the supplier side perspective right now is the one that I'm leaning towards. Now, but it's not a huge favor of that, right? I would say the probability of a substantial headwind to the economy remaining in place in the second half of the year is uncomfortably close to 50%. It's just so in the positive side. And maybe that's a bit of hopeful optimism as well. I tend to believe that we figure things out. We always have. And so this is not going to be something that's insurmountable to the US economy. We'll be able to get through it.
Yeah, it strikes me. I'm gonna maybe unfairly, but I'm gonna put you in the role, if you don't mind, of let's say you were advising a retail company and a supplier company, because you mentioned these deadlines coming up. But it seems like we've had other deadlines, right, that keep getting
Right.
kicked, and it's not just, and it's also the totality of the number of these decisions that are coming. It's not as if the United States is negotiating with large blocks. It seems like we're negotiating in one-off conversations often. So now, that being said, in the car wash industry, I do think the tariffs directly don't probably impact our industry as much as many others. The 10%, the 20% on input costs directly. I think it's more of an emotional, mental
Right.
probably impact
Right.
on the consumer. So if you're let's say you're a supplier and then a retailer, um, where would you want to emphasize, what data would you want to emphasize to rely upon this and don't get caught up in what could be the shifting sands of deadlines and tariff conversations?
Yeah, I mean, it always comes down to tactical operational things that I would be focusing on. And one of the things that I've seen be very, very effective, especially over the last couple of months, are companies, and this is both on the supplier and on the operator side, that have gone through great lengths to purposefully increase the amount of communication and information sharing that they are doing both up and down the supply chain. Meaning that if you're normally talking to your supply chain partners once every 6 months, you do that quarterly now. Or if you're doing it quarterly, you do it every month. And the first step is you've got to give some insight in order to be able to ask for some insight in return. But once established, that cadence allows you to build a bit of a moat around the relationship, solidifying the trust that you have in each other, and then increasing both entities' optimism that the future is better than the sentiment numbers would indicate. So that's where I tend to go: is what can I do as a business? And to me, right now, it's not really clear which data to pay attention to. And the timing element, as we've already discussed, says that eventually the sentiment data could turn into the hard data seeing the decline. So I'm saying, what can I control? I can control how frequently I talk to my customers, how frequently I talk to my supply chain partners, and the information and data sharing that we deploy towards each other that could be mutually beneficial for us. That's where I'm looking to make a difference.
Alex, you are so good. Here's why. I don't think we shared this with you, but it's a great corollary because it goes right back into the consumer or the industry research we did. You talk about getting close to the customer. One of the questions we asked in Q2 of retailers and suppliers is how are you responding to the uncertainty in the current situation? And so retailers, number one was get close to the customer. It's on that customer service, customer facing experience piece. So, that I think is a huge takeaway that you connected for us without even knowing. That's why we keep having you back all the
I
time.
guess so. I guess so.
Hey, Alex, thanks for taking a few minutes with us to talk. I hope you'll come back again and maybe everything will be fixed by the next time we talk.
We'll keep our fingers crossed, right? Thanks for having me. Always a pleasure. And looking forward to seeing all the ICA members at a future event as well.
Thanks, Alex.
Take care.